All righty. It's about that time. Um, Asking my colleague, Miss Alyssa, if you wouldn't mind sharing module 2, we'll get the party resumed. I'm going to make sure that my ringtone is off because you all don't need to be dancing a Dirty Diana this early in the morning. There we go. Had that happen yesterday during a training session when the phone decided to ring middle of the day, which is uncommon for me. And everyone wanted to know where Michael Jackson was coming from. I did not volunteer an answer. All right, so Module Tuesday. First of all, by way of introduction, you heard from my colleague Dr. Ayana Cummings earlier today. She is my partner in crime. We have a great time delivering trainings on behalf of GOCPP. We both bring different perspectives to the work that we do. She's, as she mentioned, she's got about 24 years of experience in different aspects of the arena, the public sector arena, as well as higher education. I've had the pleasure throughout my career, and I'm Eric Russell, for those that did not see my name earlier. Over the last 15 years or so, I've worked really dedicated my entire career to the public sector. Started in municipal budgeting and then moved into public accounting, where I've served the public sector both from the consulting and the audit perspectives, focusing largely on federal financial assistance and federal contracts as well that flow down into the governmental, the state and local government space, and then over to nonprofits and other organization types. So went back to government after 13 years and at Crow LLP, where I was the senior manager, and then went into a deputy finance director position. Came out of government again, and then went back to the dark side, as so they say. So I'm back in public accounting now, having the pleasure of working with Anadria Consulting on this engagement in particular, which I think brings a lot of the pleasure and the excitement to our careers. We have more than jobs, we have careers when we're working through public funding and the opportunity to provide public benefits. So things like this, delivering trainings, technical assistance, helping prevent fraud activities and issues, and manage fraud risk are some of the best and most exciting parts of what we do. So happy to deliver Module 2 with you today, where we'll focus on common fraud schemes. And I'll tell you, in practice, I've seen a number of these executed and implemented on both the audit side of the house, but also when I was managing and being the signatory on grant awards. It's never exciting when you are the guy that gets the report of potential fraud issues and concerns from those that are receiving funds from you. But it happens. It's real. It is just the nature of the beast, is that there's going to be risk out there based on folks' personal lives and the challenges they're seeing. And we'll talk about some of those motivations and how we can manage and mitigate the opportunities to commit fraud as well through internal controls and other matters as we look later today. So let's move on to the next slide. During the next 50 minutes or so, we're going to try to cover these learning objectives. First, we want to explain the mechanics of prevalent fraud schemes and grants management. So we'll talk specifically about the grants context within which different fraud schemes are designed or intended to be implemented. We'll illustrate some of the schemes with real-world case studies to help expand the understanding. They develop the ability to recognize how these schemes manifest in practical scenarios. So Ayana mentioned a number of different types of fraud that we see, and issues and examples that result in suspected fraud. But we're going to develop and build out on some of those to help really prepare you to identify some of those suspected fraud schemes and give you an idea as to what you're looking for. But remember that it's really not possible to detect all instances of fraud. That's a threshold that is really too high, and it's impractical. So we do try to prepare everyone for the red flags and the types of issues and challenges that you may encounter, so you know what you're looking for, or something jumps out to you when you see it, and that really helps us to understand and to dig in where necessary. Remember, one of the biggest frauds perpetrated in the public sector, the city of Dixon, with respect to their county treasurer, the city treasurer, was detected purely based on someone having to go out on unexpected leave and a different person looking at invoices, noticing that the dollars were being routed to the treasurer herself based on the use of false addresses, right, and false company names. So that just came about by happenstance because someone noticed that there were addresses and entity names that didn't make sense and that weren't registered. So accidental identification of fraud issues. So we can do everything that we can in our power to detect fraud issues and fraud occurrences, but sometimes it's just knowing what red flags might be out there and causing some additional review to occur that helps us the most. So let's move forward. All right. So, what are some of the fraud schemes that are out there? There are a number of them. I can tell you that one of the common terms and statements that you hear from those of us that deal with forensic matters on the regular is if folks spend as much time looking for jobs as they did designing how to steal money through fraud, then there would be no unemployment. And that's facetious, of course, and certainly said in an a priori sense. But we do run into situations where there are such complex schemes that are put in place that one almost has to admire it. So we're looking now, though, at fraud as a real activity and a real risk that's out there with respect to our public funding. And these are not just perceived pie in the sky ideas. These are actual planned, designed, and often executed practices and schemes that do result in loss of public funds and other matters. So we want to give you an idea as to what types of fraud are out there, what we can do from a control perspective to address them. But the key though is to understand what is the framework that's being utilized. And once we understand that a bit more, then we have an opportunity to think more about those specific categories within the framework and what we can do to mitigate the risk by really reducing the opportunity for folk to commit fraud. So we're going to look specifically at three types of fraudulent activities. First is asset misappropriation. And that's, yes, there is theft that's included in asset misappropriation, but more often in the grant space, we don't see straightforward theft of cash or even non-cash assets. The type of asset misappropriation that we most often see with respect to grant dollars is where funds are used for ineligible activities or potentially to cover unallowable costs. And for those who may not be as familiar with those terms, ineligible activities are just those types of tasks or actions that are not within the authorized scope of work. So, common example, general government activities or general government costs, maintaining City Hall, for example, are types of costs that are types of activities that are ineligible. But we'll also often see public dollars being utilized through transfers and other types of accounting functions to cover those types of unallowable or ineligible activities. So that's a type of asset misappropriation that we most often see with grants. Financial statement fraud, the falsification of records or the misrepresentation of disclosures and other matters, either by omission or the presentation of untruths. So we'll talk a little bit about financial statement fraud and how it manifests itself, but also financial reporting fraud from the federal perspective, the FFRs, for example, that you may be familiar with, and the financial reports you submit to GOCAP. So modifying the account balances or the narratives that support account balances and budgets are a type of financial statement fraud, all inclusive. Then the types of corruption that we see, and then these are the types that you often see as well on the news today, are bribery, kickbacks. I'll add gratuities to this list, and also conflicts of interest with an impact on award financials. So with that, let's move forward and talk about and focus on those three types throughout the next hour. So, the first piece is thinking about the misuse of funds, or either misappropriation of assets, financial statement falsification, or otherwise. Sometimes we're in situations where there are ghost employees or ghost vendors. We are, of course, using the term contractors now in the grant space. We're trying to get away from vendors. But the contractors themselves, and we see this more, at least in my career, I've seen it more in the international arena than I have here within the United States. But the city of Dixon said, "Hold my beer," right? The treasurer there did have the opportunity to create some contractors that did not exist, and the checks were routed, of course, to her personal address. So those are instances where you have an organization that is not real. We call them fictitious employees or vendors or contractors, where the individuals or the organizations that are listed may have been created purely for the purpose of obtaining financial benefits or redirecting funds to specific individuals. Now, we have internal and existing procedures already to help mitigate that risk, right? So we ask for evidence of registration with secretaries of state's offices. We go through and we actually physically visit locations to understand, okay, well, this employee exists, this contractor exists. We don't just rely on the presence of PO boxes and things like that, right? So understanding that the ghost employees and ghost contractors come into play when you're really looking at large sets of data where one name may not jump out at you, but you might see different variations of the same name. We often see names that don't really make a lot of sense. Mary Maria, Mary Mary. Not Mary Mary, the group that used to sing in the 1990s. Yes, I'm dating myself. But Mary Mary may be out there as a name of an employee. So we always sample from the audit perspective employees to see their original files and try to walk in and see them working as well to help understand this type of risk. It is continuing, and it is a type of risk that and a type of fraud approach and scheme that does manifest itself more now here in the domestic United States than we used to see. Our existing procedures here in the US for IRS purposes and others inherently give us controls over it. But because ghost employees and ghost vendors are one of the most common fraud schemes you can see when you Google, we do see more and more instances where those less experienced in the forensic arena do try to implement and execute on this type of scheme. So let's move forward. False billing and invoicing. So this is one that also relates to misappropriations of assets and also financial statement fraud as well. And in particular, the false billing can take a number of different um, appearances, so to speak. You can have, yes, the inflated amount. So we're increasing the quantities, increasing the hours. Maybe we're increasing the number of employees who are charged under an account. Those are types of false billing and invoicing. But what we often see that's more common is where we have items that are within the indirect cost realm in particular. Excuse me. So you have the inclusion of ineligible or unallowable costs within what we call the cost pool. So when you're calculating an indirect cost rate, for example, we have the numerator, that is your pool, that should be only your allowable cost. And then we have your denominator, that's the base that it's distributed over. So whether that's modified total direct costs, for those of you who may use that type of term, direct salaries and wages, maybe another base or what have you. When there's a fraud scheme being developed, we often see either the inclusion of unallowable costs or ineligible expenses and tasks within that numerator. So they're able to recover those unallowable costs through a percentage that kind of masks or hides the specific types of costs that are going into the pool. Or we see the base that is reduced. So a smaller base inherently results in a higher rate because the denominator is going down while the numerator remains static or goes up. So in either scenario, the percentage that's being used to determine what you're charging back for indirects on a bill or an invoice or a draw, if you're drawing down funds, is used improperly to result in an increase of dollars that are provided to that particular contractor or recipient or subrecipient. Now, other pieces that we see in practice are where you may have a fixed amount cost, right, or a firm fixed price line item within your scope or your agreement with the funder, and maybe you include additional costs within the value of that line item. Well, what we know is that, especially as of October 1st of last year, on the federal side with the uniform guidance itself, is that the government has, the federal government has come through and reminded us again that we do not have the privy of understanding actual cost experience on a firm fixed price line item. And we're seeing more fixed amount subawards and fixed amount awards as well, which do require prior approval from either GOCPP or other funders that you're working with. But often those ineligible items are included within the actual cost experience that we don't have privy to. So our obligation is when you're applying for funds, that is where we look to apply the cost principles and understand what's allowable and what's going into those firm fixed price amounts. So you're developing your budgets and you're working with organizations developing budgets. You want to obtain a line item distribution of what exactly are the costs you're including for me. And that gives you an opportunity before there's ever a bill or an invoice or a draw request to understand what types of hours are expected, which employees and which contractors are expected to be providing services, what are the quantities of goods that may be provided or expected to be provided, and is each type of item connected to and associated with an eligible or allowable activity and costs. So that helps us to prevent the opportunity for inflated charges or baking in costs and activities that are ineligible as part of fixed fee amounts or other rate calculations. So that's one of the areas that we see the most types of potential fraud in, is with respect to really trying to hide or mask ineligible cost activities within rate calculations and general invoices that don't have a lot of support. Let's move forward. Double dipping, I'm sure you've all heard of this one, duplicate billing. It is often one of those areas where there are unintentional commissions of potential fraud. And this is where it gets back to what I said earlier, where there's the known or the should have known that factor into the False Claims Act. And the False Claims Act is, of course, the basis ever since the Reconstruction era, actually, when we first adopted the False Claims Act. It's still the Bible in case of grant-related and federal contract-related fraud matters and how we pursue them. So the False Claims Act includes an expectation that you knew there was an error or you should have known there was an error, and as a result, you should have prevented it. So duplicate billing is one of those areas where at worst or at best, you should have known. And that's because we are able to prevent duplicate billings that increase the coffers for those who are seeking to improperly obtain additional dollars through reconciliations and other best practices from financial management. So the same invoice or the same expenditure should not be paid multiple times. We should not be having capital assets or any assets actually expensed and also costed through as depreciation expenses, one way or the other, but never both, right? So those are items that we have to think through. What are we reconciling to? We should always reconcile our draw requests and our reimbursement requests to our cumulative expenditures in the accounting system. As Ayana mentioned earlier, one of the key risks that we do look at is whether or not someone has an accounting system, and do they have documented procedures that include reconciliations and other best practices to help identify or otherwise to detect and correct instances of potential duplicate billings and duplicate charges. Frankly, some still get missed. The volume of activity that you may deal with on a daily basis or a monthly basis or what have you may exceed what capacity you have internally. So there could still be items that are missed. And in those times, we want to be practical, right? So from the management perspective, we don't want to jump to the conclusion that there is fraud because there's a duplicate billing. But you want to disclose that you've identified such an issue and that you intend to correct it, usually through a credit that's provided subsequently or other type of correcting action. But you want to be transparent with your funder. So you want to contact GOCPP or whomever is providing funding to you to let them know that you've identified a billing error, a duplicate billing or what have you, and that you need to understand how to address that matter and how to return the funds appropriately to address it timely. And that typically those types of human errors do not trigger concerns around fraud or risk of fraud or suspected fraud. Rather, they motivate us to make sure that control systems are in place and are enhanced and modified appropriately. But to the extent, excuse me, that you identify and that you see trends, right, in duplicate billing. So we're seeing the same organization billing us repeatedly for the same entity types. We've got constant billing errors. In the aggregate, that may prompt additional action. We'll talk later about what one does in response to identified issues or risk of fraud. Make sure that you're covered and that GOCPP is covered as well from the perspective of being proper stewards of federal and governmental funds. Let's proceed. So let's talk a little bit here. I know Ayana discussed earlier today kickbacks in particular, as well as certain types of procurement matters and other pieces. So I want to talk a little bit about this because it does get pretty complex on occasion. And we all want to think about, again, that you're designing procedures from the control perspective, right? Not to result in absolute assurance, right? That every error, every issue of fraud, every mistake has been detected. That, again, that threshold is just too high. It's impractical, and neither the federal government nor any state government I've ever worked with, and certainly not those of us that are conducting audits, investigations, and other attestation engagements, we're not looking for absolute assurance. We're looking for you to have implemented an internal control structure, a system of policies, procedures, technology system, resources, things of that nature that help to provide reasonable assurance that you will detect and correct such issues, errors, whether due to fraud or mistakes, in a timely manner, rather and before they become material, as opposed to detecting and correcting every error that's out there. And that one of those reasons is that there are things that are beyond our control. So think about kickbacks, for example. Kickbacks in matters of collusion are almost impossible to catch from a transaction by transaction basis. There usually has to be some type of communication, disclosure, whistleblower complaint, something of that nature that really allows us or causes us to focus on the individuals that are involved, as opposed to the dollars, the supporting documentation, things of that nature. So kickbacks are really critical because they do include cash. And sometimes they include positions. So this is a situation where the quid pro quo is satisfied in full. So there is if you do this, I will give you this, whether that's an appointed position in an administration, if there are potentially additional hours that are provided at a certain time of year, which increases overtime, and maybe it gives you double overtime for hours that you may not have to work if you do a certain action. Or most often we see it in the procurement actions, where those that are involved in procurement processes may have an opportunity to influence who will receive a contract, or even in the subaward space, which aren't subject to procurement, who receives a subaward. And what happens is there is an offer to an individual, typically an individual, that if they take a certain action, then they will be provided with X, Y, or Z. And in the bid rigging perspective, that's often, if you help me get this contract, I will provide you a certain percentage of the contract value. And that's a kickback. And that's a type of collusion where both parties are working together to establish that quid pro quo. Let's move forward. So what it manifests itself into when we're looking at bid rigging and kickbacks is specifically an increase, typically in the value of the costs that are going to be charged to an award. So that's how the dollars really get back and benefit the bad actors, so to speak, is that there are additional and higher costs being charged to the program that reflects their margin, right? That's what the benefit they're getting from the activity. Now, there's also a type of category that we call gratuities. So you'll see this in mandatory disclosure requirements for federal funding in particular that flows through GOCPP also. And gratuities are those where we've got the quid and we've got the pro, but you don't usually have the quo. So there may be something provided to an individual who takes an action, but there may not have been a conversation that says this is the quo. So gratuities kind of stop before the quo comes up. And by way of example, you could have an elected official that votes for a certain type of building to be constructed, and they may get a check that says thank you for voting in favor of this building, and it comes from the general contractor or maybe the A&E firm or what have you. But there was never a discussion between the two that occurred. So there's the quid, there's the pro, but there's no quo. That's really discussed in advance. The collusion piece is a little bit harder. So investigators have to really focus on that aspect for gratuities a lot more. It still can result in misrepresentations of cost, but more often it results in the provision of opportunities that would not have otherwise been present. So that's one that we see quite often in our gratuities in the public sector space. But the piece that we're really trying to guard against are unnecessary expenditures or projects, such as what you see with gratuities, is a vote that goes to the existence or the authorization of a matter that may not have been needed, that results in opportunities for others to gain revenue. And then on the kickback side, it's an action that usually results in higher costs being incurred that create a financial opportunity and financial benefit for bad actors. In either case, our obligation is to establish and to implement a series of controls, right, to help guard against that. And that's really what procurement is. Procurement asks you to disclose conflicts of interest, not ask, it requires you to disclose conflicts of interest. We require competition to help make sure that whatever the distribution of respondents is to an RFP, RFQ, RFA, NOFA, what have you, we come back to some form of market rate or cost or price that we're able to use to know that costs are reasonable, regardless of who wins. So even in the case of a potential kickback or what have you, there should still be some form of market analysis that's conducted through procurement to make sure that the dollars are awarded in a reasonable manner and at a reasonable value. So we do still mitigate the risk to the programs from the perspective of implementing procurement procedures that comply with procurement standards. But we still certainly have to address issues of fraudulent issues when they arise and when they come to our attention. Let's proceed. So diversions of funds, this is one of those cases where we do often see instances where members of program teams, those in financial positions, executive positions, or those that may be involved in a kickback situation, play a role in diverting or rerouting dollars to specific organizations or individuals to really help provide them with financial benefit. So some of these cases and what this looks like in practice is where you may, again, as I mentioned earlier, see ineligible or unallowable activities being funded, like general operating expenses or general government expenditures. You may see those. You may see if you're working with nonprofit organizations or working with commercial entities, we often see reorganization in what we call organizational expenses. So, where you're trying to fundraise, or maybe you're working to redesign or restructure your stock portfolios, how much stock is out there, how you're designed as an organization overall for a number of purposes. You may reevaluate that, or mergers and acquisitions. So those types of activities are not allowable, and we'll see dollars rediverted or diverted for purposes of covering those types of costs as well, or for additional compensation, right? So there are compensation limits in place, both on consultants, but also on employees. And you'll see some of those within the GOCPP general terms and conditions, but also within federal regulation, we have caps on compensation that can be paid with federal funding, right? And some of that is to limit and to reduce the potential impact for funds to be diverted that result in greater compensation for those who can influence the flow of funds. So the diversion of funds can look like not just rerouting dollars to a specific organization, but also to cover otherwise unallowable or ineligible costs, or to increase one's compensation and take-home dollars. So any of those results in a benefit to an individual or to individuals at the expense of or at the cost of damaging or challenging or otherwise adversely impacting a program. So let's keep moving. Identity theft, I think we hear about that it's way too often these days. It continues to be the case that there are instances where personally identifiable information is utilized and can result in there being stolen identities and really just a violation of one's personal trust. Sometimes you don't even think about it, and you may be sitting in a situation in a case where this occurs. Prime example, many of us that are involved in governmental procurement have to complete a number of forms as part of any procurement process, right? And these are the forms that, of course, only take 5 minutes. And by 5 minutes, I mean 2 days to complete. But some of them still ask for social security numbers. And I've seen very recently where a form that I've completed is included within the full contract um, that's filed. And it includes my social security number unredacted because my form had to be submitted as part of the procurement documentation. It still happens today. So one of our obligations under the uniform guidance itself is that we must implement procedures to safeguard personally identifiable information and other types of sensitive information to help get at issues like this, where those that are bad actors are looking for social security numbers and all of that that may be out there. Now, for anyone who's out there looking for my information, you are welcome to take my student loan debt. If you're going to take something, take that. But no, I'm being facetious there. There are those that are out looking for instances where there's documentation or there's information that they can take and improperly utilize. So, and that can be any combination of information, addresses, names. Maybe it's the unique identifier for my loan debt. Again, take the loan debt if you're going to take something. But it's a combination of information that can expose you to risk. And it exposes you because you own the data and you're responsible for safeguarding it. Although that individual, that bad actor, may grab the information used to steal an identity from your information. So we want to mitigate and mitigate the risk of such an item happening. by safeguarding documentation and really addressing um, access controls, whether it's through our online applications, our digital processes, or we forget about this often, paper. Now, remember Waterworld when they got so excited about paper, paper. There is still paper out there, and Kevin Costner did not eliminate all of it. So, depending on where you are, there are parts of the country, and a lot of us do work that's also international when you're dealing with the types of programs that GOCPP implements. The federal government funds a lot of international work, including at one point I worked with the University of Maryland, Baltimore, UMB, great university, great school, good implementer of federal programs. They were working in Africa with a number of global AIDS projects and really trying to get out and about throughout the country, throughout the continent, in terms of how do we help mitigate and prevent ongoing issues with AIDS as part of the Global AIDS Project or program. Well, when you get into country, right, there's so little bandwidth that the issue is not cybersecurity and it's not the IT control area. The risk and where there's exposure to identity theft and other matters is around paper. So they still operate in a paper-based environment where they know that the obligation is to safeguard information, to safeguard against exposure to sensitive information, but no one told them what sensitive information meant. So what are you safeguarding exactly? Those base items that tell us not only what the scheme is, which is to steal data and documentation that allows for identity theft, but we have to make sure we're training and communicating to folk as to what steps they have to take to help address that potential risk. So that's usually through training, but also understanding what types of data are available and how can they be absorbed or grabbed. So think about that and maybe put yourselves into a position where you're thinking as the fraudster. I always like to do risk brainstorming where I ask folk, if you were to try and defraud the program, what would you do? So think about that in terms of understanding what types of schemes you may be exposed to as well, and you can design procedures accordingly. Let's move forward. So fabricated supporting documentation, just that electronic or paper documentation that you see, can certainly be types, and they are often the types of items that support and really result in the perpetration of fraud activities or suspected fraud activities. So we see electronic invoices or hotel receipts, for example. That's a really common one, is where someone will take a hotel receipt, change the dates, change the folio number, and then continuously resubmit that receipt with changed dates and folio numbers through the expense reimbursement process. So we see those often. We see where someone will go onto Microsoft Word and just download an invoice template and then send the invoice in with falsified data. But depending on how closely AP is looking and whether they've been trained accordingly, they may never try to match the PO to the invoice to a receiving report showing that the good or service was received. And if you don't go through that matching process and just pay the invoice, well, the fraudster has gotten their dollars, right? So they just created an invoice, falsified it based on a template that's available on anyone's personal computer, and they can defraud the program in that manner. So you want to be cognizant of the types of required supporting documentation, but also periodically ask for an original, not just an electronic, to help keep folk on their toes as necessary, but also understand and verify the legitimacy of the documentation that's being provided. Other piece is to question documentation that does not seem appropriate. So I like to think about the times when you look at time records and someone works 40 hours every week on the penny for 3, 4, 5 months in a row. Now, I don't know about y'all, but I'm going to oversleep at some point. I'm going to take some time off. Kids get sick. They get sick at inopportune times. You have to go home early. So you don't have exactly 40 hours that are worked every week for months on end. That's very, very uncommon. And it's usually a big red flag that tells us that there's potentially some concern in the integrity of the documentation supporting the allocation of labor costs. So you want to think about those types of items and where there are unexpected trends in data or repetitive actuals. So $24.99 being the actual meal expense across the board for individuals 3 times a day for however many weeks on hand, because $25 requires actual receipts. So those types of trends should raise a red flag and cause you to do a little bit more due diligence from the supporting documentation perspective. Let's keep going. We've already talked about the diversion of dollars for personal gain, so we can keep on chugging. The conflicts of interest I covered as well during Ayana's last session, so we'll continue to move there. Keep in mind, of course, again, that having a conflict of interest does not inherently mean that there's a fraud issue. One second. Excuse me. Is there a third? Oh, I'm a two sneeze person this morning. I'm usually a three. Sorry. So we want to think about whether a conflict does represent a fraud risk. It can, but you're really, thank you very much, Erica. You're really looking for instances where conflicts are disclosed and the inappropriate action is taken, either substitution of that individual out to move them out of an evaluation committee or something of that nature, or taking other steps to evaluate and understand how to mitigate the risk of any perceived conflicts as well. Now, the other piece, and as we move into the subrecipient zone itself, we do have, and I saw a question just popped up, so you're thinking what I'm thinking too, is we've got a lot of artificial intelligence out there now, right? A lot of folk are assembling and they're documenting things and creating sentences and proposals using different types of AI. Well, sometimes you may see this as well. Sometimes the sentence that is generated is not true, or maybe there's a contextual issue, or the information that's grabbed is the same as what you'll see if you were to go out and Google yourself. And then that information is placed into proposals or into invoices, and that becomes a misrepresentation type. We see that more often with newer or smaller subrecipients who may not have the experience writing proposals and generating the types of supporting documentation that we are expecting, that we are accustomed to seeing. So they're seeking assistance through the use of artificial intelligence. And that's nice to see that they're seeking assistance, right? But the challenge that you run into in practice is that anytime you've got poor data and poor inputs, you run into that situation of a potential misrepresentation or other issues that create a fraud risk. So you want to. I'm sorry. I think someone may have come off mute accidentally. So understand that is a risk, specifically with some of our smaller organizations or newer organizations that need technical assistance. But you also see instances where not just collusion with subrecipients and contractors that Ayana mentioned earlier, but also with the actual classification of organizations as subrecipients or as contractors. So an intentional misclassification of an entity to be to be listed as a contractor instead of a subrecipient is not altogether uncommon, because contractors can earn a profit. Subrecipients cannot. And contractors are not inherently subject to audit. Subrecipients are. So to create a benefit or an opportunity for benefit that is less likely to be detected, one would classify an organization as a contractor versus a subrecipient. So that's why we focus a lot on the subrecipient contractor determinations and understanding the basis of their conclusions and the work that they're performing. So, and as a result, monitoring and oversight of their performance and the originality and legitimacy of their supporting documentation is what is absolutely critical from a control perspective and really addressing that type of scheme. So I'm going to ask us to move forward because we've already talked about the falsification of documentation, unallowable costs, things of that nature, and some travel items. So let's move forward to our case studies as we wrap up this particular module. And we want to think about a couple of the case studies here, just to make sure that we're all thinking about these schemes and how we address them so that we're able to identify them in a real world type scenario. So let's move forward now. Case study number 1, the ghost employee nonprofit scenario. So here we've got Harmony Haven, a small nonprofit, received a grant for a youth mentorship program. The finance manager, Ms. Sarah, was responsible for payroll. Over 2 years, payroll expenses on the grant budget seemed slightly high, but no red flags were overtly noticed. Eventually, an anonymous tip to the board's newly established hotline alleged that John Doe, a program coordinator listed on the payroll, had never actually worked for Harmony Haven. So that's our scenario. Let's move forward to the next slide and think about what this means for us. So we've got what happened, right? We've got potentially Miss Sarah has added John Doe to the payroll system and directed his payroll deposits to a bank account she controlled. And she had timesheets and performance reviews for John Doe that supported the activity detected after 2 years. So this is a ghost employee scenario. But what else may have happened? Are we bound to Sarah having executed that activity, or could something else have happened? What do you think in the chat? So one thing that I could think of is that it may not have been Sarah. So one scenario is that Sarah may have been the person that added John Doe, but oftentimes it's not the payroll person that does it. It's someone else that's in a program role that would have an employee that they hire, and especially if they're working remotely. They hire this employee. There's only one approval that's really necessary from the perspective of the program hirer. We'll need to choose a different term. Whoever hires this person may have to provide documentation of approval. But then they need I-9 and other types of documents, right? It's difficult for one person to do all of this. So there's typically some form of collusion that may be present. And there should be segregation of duties. Oh, Deborah, you and I we're channeling here today. So Deborah mentioned there should be segregation of duties. There's a payroll person, but then there's also the paperwork submitted for John Doe. Yes, there should be multiple people involved, including a separate person validating that the I-9s and W-4s are true, accurate, and any electronic documentation has been supported by a view of originals as well to guard against ghost employees. So this is certainly a ghost employee situation. It's one that, again, it's not altogether uncommon, but it may not be the payroll person, him or herself, that has perpetrated. It's often someone that's a little bit more decentralized and has less oversight. So Kim mentioned that it's not always possible to have segregation of duties. That is absolutely true. We do often run into situations where there may be 3 total employees that are involved or that are working on a project. So segregation of duties is challenging. Oftentimes we'll see the HR function be contracted out prior to the approval perspective. So there is some inherent segregation of duties. Interviews, for example, may be conducted by a third party, or there is an evaluation or an analysis and a review of the HR function and those types of hiring decisions and payroll matters from an outside party later, either added to your auditor's scope or otherwise, to help provide some reasonable assurance that even in the absence of segregation of duties, that there's some type of control that's there to help make sure that things function appropriately. So let's proceed to our next case study. So here's our overbilling contractor university. Global Research University received a substantial grant for multi-year environmental study. They contracted with Echo Solutions Incorporated for specialized field equipment and support services. Midway through the project, the grant administrator noted that Echo Solutions invoices seemed consistently higher than initial estimates for similar items from other vendors. The invoices often contain broad descriptions like consulting services without specific details. So before we go on to the next slide, let's just give us your initial thoughts on what you think may have happened here. What are the red flags that you may have seen in this overbilling contractor situation? And yes, I'm drinking Diet Mountain Dew. Do as I say, not as I do. One should not have soda this early. So one thing that we could think through that's a possibility here, right, is where there may not have been sufficient cost price analyses to make sure that there's a control on the total costs that are to be submitted on invoices during that procurement process, right? So we've got the opportunity is present to overbill or to charge more than expected. The other piece, and this is one that, oh, someone has a ginger ale, you could share. The other piece that we think about in practice is that You don't have to keep paying those invoices that are high. Sometimes we have to put a stop work in place to really understand why the costs are as high as they are. They could be valid. You don't necessarily have a fraud issue when the I'll say the expected level of effort has expanded, or maybe the scope has expanded, not increased in terms of number of items that are included, but maybe the amount of hours, people, um, the number of assets or maybe computers that are needed, that those items can increase. But you could also have, good idea in the chat there, scope creep, where they're doing more work than they should have been doing without being properly managed. In either case, you don't have to keep paying invoices until you're comfortable that the costs are allowable, that the consulting services are valid, and that there are deliverables that support what's being paid. So let's move forward to the next slide. So in this case, Echo Solutions was colluding with the project coordinator, so that the approvals of invoices would continue to be accomplished and met, and they were paid higher than market rate for the goods and services provided. To make things juicier, the coordinator even got a piece of the benefit as a kickback. So in this case, the big question is, what's the red flag that we're expected to act upon? There should be some form of monitoring or oversight control out there, right? That identifies these invoices ultimately and sees that the coordinators approve them, but that does some follow up, and that usually triggers an investigation resulting in identification of kickbacks and other items. So, with that said, that's our case study number 2 for our overbilling. Now, we also have, before we move forward, we also have instances where there are overbillings of time. And that is one of the areas where the most risk is really where we are subjected to the most risk, because labor charges and associated fringes are usually the largest, if not the largest, budget line item of any of our grant funded budgets. Those and then contractual, right? So we don't just look for overbillings in terms of contractors, but also with respect to our employees. Are we seeing charges for labor based on effective hourly rates and compensation that are higher than what was in the budget? Are we seeing additional positions and people being charged above and beyond what was expected and charged within the budget? So when we think about those types of items, we want to understand what's causing those increases. And as a result, try to manage through understanding what's causing the labor accounts to be, we'll say, depleted more promptly than expected, because that can be a real red flag in terms of what's happening out there in the field and whether the hours and the other information is valid, or more often than not, if there are other budgetary challenges that an organization is encountering, and they're shifting people that are otherwise on the bench and non-chargeable to your programs, where they're not adding benefit really, but they're charging your programs as a way to address other challenges that they may have. So with that, I think from the perspective of what we wanted to get out of this particular module, we've covered the key items in the case studies. We did include others that are present, so that you have items to address on your own independently as you go through and kind of debrief later on your own. But let's jump to our wrap up at this point and then move to the next module. There we go. So our summary overall, there are, of course, fraud schemes that are out there as active methods or also historical methods that are used to commit fraud and that are then mirrored going forward by others who are also bad actors. There are common schemes that include either false billing or elevated overbillings or billing for unallowable or ineligible costs, kickbacks and gratuities, as well as conflicts of interest that manifest themselves into increased cost or unnecessary cost for a program. Those are some of the common schemes that we see. And then there are real world case studies to give you an idea as to what's been seen in practice out there. So you know what's happening around the world in terms of how folk are currently working through to commit fraud. So I can tell you that the Association of Certified Fraud Examiners does issue an annual report on fraud that summarizes what's been seen throughout the world. in terms of actual fraud that's been committed and how those matters were detected and hopefully corrected. And you don't have to pay for the high level, the summary of that report, but it's a common item and a really good item to look at over time, give you an idea as to how things are happening and what are the trends. The details you have to pay for, but you can get the summary for free typically online. So your action item, of course, is to look at some of these common fraud schemes and understand if there is a way to address or a way to identify whether your program may be susceptible to some of those items and which ones may be material risk that you need to design controls over. And yes, I can certainly take a look at the finding the actual name of the annual fraud survey and put that in the chat. So keep me honest, though. Don't let me forget before we separate today. And with that, that wraps up module 2. So I'm going to turn it back. Well, let's take about what I think we got 10 minutes for folks to have a bathroom break and a coffee break real quick. And then we'll get started with module 3. Ayana's going to kick that off, and then I'll pick up the middle of it.
Hi, everybody. I'll need about 2 or 3 more minutes before we dive into Module 3 on internal controls. Thanks.